Hey everyone, Mortgage Nerd here. So, doing another interview with another great Miami realtor. Today we have Monica Betancourt, Senior Vice President and Realtor at Berkshire Hathaway's Home Services, EWN Realty. That's a mouthful now ever since Berkshire Hathaway's bought them out. But
Sure is.
uh, thank you so much for joining me.
It's my pleasure. Thank you for having me.
We're just going to jump right into it. And when was it that you started in real estate?
So I really started working in about 2007. I got my license in '06, I believe, but I kind of started working in '07. So had a year to kind of get my bearings, and then the market crashed. So that was a fun time to start. It's actually, I think, a good time to start.
And actually I know people opening their mortgage companies. I started a little network of mortgage broker owners, and we all help each other and everything. And I tell them, I'm like, now's the best time that some of them did it just last year. Because when you're starting from the ground up, when there's nothing, it's a lot easier than when you've built something and then now you've got to scale it down. That's a lot harder. So
I
tell me a little
agree.
bit about your experience back then starting out in the crash.
So I started with a very small brokerage, and that was, great. I mean, it was people I knew and all that. But right before the crash, I realized that it was really very difficult to be in a place when you're starting where there's not a lot of formalized training or big groups that you can join or mentors that you may have in the company. So I did work there for almost a year, but then I changed to Berkshire Hathaway. Well, it was then EWM Realty, right? I was very glad to be there because they do have a lot of training. And when the market crashed, there was a lot of support and training and guidance about what to do and how to do. Because one of the things that our CEO, Ron Sheffield, who is still there, thank goodness, would say to us, listen, money is changing hands, right? People are buying these properties. A lot of people were losing their properties, which was terrible, but there were people buying and selling. And so they helped us to figure out how to get in that space, how to get in the space of people that were buying and selling. It was a little more difficult than when everybody's buying or everybody's selling, which we've all experienced, thankfully. But there was a lot of trading going on in the properties in Miami-Dade County. So you just had to figure out how to network and get there. And I think that it was difficult, but it was the best time to learn. A lot of people did REOs for banks at the time. I did not do that, but that was an incredible niche market. And the people that did it, did very well and worked very hard. So that wasn't my niche, but I still was able to get people that needed to or wanted to sell their homes at that moment and, do a different take on where they were going. So it was great to be with EWM and be able to have that name behind us and that brand. And people trusted us, and so transactions happened. And it's funny because now I've sold a lot of the homes that people bought at that time, and the increase in equity that they've experienced is incredible.
So you took advantage of having that managerial team above you and everything. And now you have a team, right?
Now I have a team. Yes, I have a team. I have a small team. We are 4 realtors and 2 full-time administrative people. So I feel like this is the way to go now. You really need support as you grow your business, right? You start with an assistant, but as you grow, you realize you can't be everywhere at once. So you do need a team, and it's very helpful. And I feel good to be able to help other people as well as when I was helped when I was starting. So now they have the backing of Berkshire Hathaway EWM Realty, but they also have me, as the team leader to be able to guide them and help them, and they help me. So it's a team effort. And I think everybody benefits, which is really nice. I'm glad to be able to help mentor and help these people build their business as a team, which that concept didn't really exist so much when I started. And I think it's
Yeah.
really a great one.
Yeah, I remember when I started, it was like, here, go get clients, and then I'll teach you how to do an application and do everything. It was all on the job training. Um,
Exactly, exactly. Actually, the first listing that I got, these people wanted to sell their house, and it was $1 million house at the time, which was a big deal, right? In 2008 when everything was crashing. And I thought, oh, this is great. And I ran back to the office and said, oh my God, right? What do I do now? So I teamed up with somebody that had more experience and said, would you like to do this with me? We'll split 50-50. And I felt like I had a support of somebody that had a lot more experience than myself. And they were able to participate in a listing that they may not have gotten. So it worked out. But yeah, like you say, go get clients and then we'll show you. So
And at what point in your career do you felt you really started to gain momentum and started to really turn the corner, I guess you could say, and what was the catalyst for that?
I think it took about three. I mean, I was ecstatic when I had, $4 million in sales after having nothing. But I think it took about 3 years probably to get into the real numbers. Um, and I totally credit EWM with that and the support and training that I got from them. I mean, I'm a go-getter. I'm a people person, which is why I wanted to be in this business anyway. I enjoy helping people and speaking with people and trying to find what it is that they're really looking to do, whether they're buying or selling, what will be their ideal situation. And I enjoy helping them to reach that goal. But having the backing of a company that will answer your questions and will help you to achieve whatever your client's goals are was a big deal for me. So, going from, let's say, 0 sales to 4 million to all of a sudden to 15, 16 million, that was a big deal. And I think you have to be willing to work a lot of hours when you go into residential real estate. Our customers are not usually available, 9 to 5. I mean, at a certain level afterwards they are, but when you first start out and you're dealing with people that are also working 9 to 5, 8 to 6, 8 to 7, you really need to be available in the evenings and on weekends and whenever they're available. They it's not like bankers' hours. They're working really hard too. So I think that's a big, important feature, being available, answering your phone. I get told all the time when I get listings that one of the reasons that people feel comfortable is because I'm available. When they need me, when they call me, when they email me, I answer. And I think that's a big deal. That is part of being successful in real estate, a big part.
Agreed. And I have to do the same, even though we do have banker's hours more than you. But we have to be available to you and your clients when you call us on that weekend when you're doing a showing. So
that is 100% true. And we appreciate you so much when you answer that phone. Yes.
I only give the caveat, hey, if I'm at a Dolphins game or I'm on the boat, it's going to be a little tough.
Right. But you get back to us.
Yes, yes. You told me a little bit about your 2008 experience and the way the market was at that time. What comparisons do you see to this market that we've been going through where the rates have gone up and it's stagnated certain parts of our business?
Well, I mean, the rates going up definitely affected our sales. I think last year we were looking at the state of the market the other day with Ron Sheffield, our CEO, and last year was the lowest number of sales that we as an industry have had through the MLS since 2010, I believe. So interest rates going up definitely affected, right? The people that, let's say, when the rates were 3%, could have bought $1 million house if that was the payment that they could afford. When the rates went up to even 6.5%, all of a sudden they had a 33% decrease in the purchase amount that they could afford. So sometimes the inventory just wasn't there at that level, or they just couldn't afford anymore with the insurance costs in Florida, plus the mortgage, plus, everything. So it definitely affected sales. But I think the interest rates, as you know, have come down and they're historically at a very good level, according to economists, right? Somewhere between 5 and 6.5%. In the 80s, when I bought my first house with my husband, our interest rate was 14%. And we had a 10-year period, I think from 79 to 89, if I recall correctly. I have a chart here somewhere, that the interest rates were above 10%. And there were people and economists saying at that time, you were never in your lifetime going to see interest rates below 10%. But we did. And the economy continued and the sales continued. And obviously our inventory got depleted when the interest rates were really low, right after the COVID shutdown, 2020, late 2020, 2021, and even 22. So, then they started coming up a little bit. We did get really high, almost to 8%, or I guess for some investment properties, even 8%. And so, but now they're back down, I think, to a more historically normal, if that can be said, level. And I think that in my experience, people are getting 6%, 6.5%. They're happy with that. Just from my own anecdotal experience, I just had somebody get a loan for 5.65 last week. We were all thrilled for him and his family, and they were able to buy the house they dreamed of. So I think the interest rates are probably, according to what we've heard, are going to stay somewhere. I'd love to hear your opinion. Somewhere between 5 and 6.5 for the next.
That's kind of the consensus. I tell everybody it's the example I like to use. Like right now, rates are on a downward trend. So they hit the 8s in October and then quickly went down to the 6s in December. Conventional rates, there's different programs that, VA, you can go into the 5s, or FHA and some jumbos, so there's different ones, but just the benchmark of conventional went to the 6s. And then now since the beginning of the year, it's kind of been sideways, but up and down. So the analogy I use is think of a kid on an escalator. Right now the escalator is going down. The kid has a yo-yo. So the yo-yo is up and down as we go down. And so I think we'll get into the 5s, and then maybe it'll be like that sideways walking, thing at the airports, and then the yo-yo up and down sideways from there. And different things, different catalysts in the economy will push them up into the 6s, maybe down into the 4s sometimes. But that I think would be very healthy for us, like you're saying, where you'll have a good amount of those buyers that things are more affordable for them, but not too many. When the rates were in the 3s and 2s for some programs,
right?
But not where we're in the 6s and 7s and 8s where people are afraid and they're just sitting back.
Right. I think that fear, from what I can see, is gone. And I think that when we're talking to buyers and people that have rented maybe for the last few years, or when the rates started going up, they held back on buying. I tell them now, get in the game, buy what you can afford, because the investment you make now, even in 5 years, is going to increase, right? You're going to have all this equity that you would never have if you continue renting. So maybe you can't buy the house of your dreams right now, but just buy what you can buy now. And then with that increased equity, in a few years, you'll be able to sell that one and buy your next one. And, that's the only way to start. So, even my own kids, I tell them, okay, so just buy an apartment, right? Buy a 1-bedroom condo wherever you live. They don't live in Miami, and start, gaining equity, because that's the name of the game in real estate. Mm-hmm. And traditionally, real estate investments always, increase in value. So I think that
increase will be even more now because of the lack of supply that continues throughout the country.
We continue to have more buyers. I think, especially in the states where the population is increasing, right? So I think South and North Carolina and Georgia, but really Florida and Texas are the states that are benefiting the most from the population migration. And so being one of those two that has it, we think we are increasing 1,200 people a day in the state of Florida. Mm. And so definitely coming in and getting in the game here is the way to go. Prices are going to continue, I think, in an upward trend, maybe not as dramatically as they were before, but also sellers are beginning to see that this is a good time to sell, so we'll have a little more inventory. We are getting back all our international investors that we lost during the shutdown because they couldn't travel. Some countries are still in their negative exchange, so it's more expensive for them to buy than it was a few years ago. But there are some, like my home country of Colombia right now, the exchange rate is such that it's cheaper for them to buy right now in Florida, in the United States, I should say, but they do tend to come to Florida, than it used to be. So there's quite a few countries. I think the United Kingdom is one of them. And so we're getting back our international buyers, investors, vacation homeowners, which is good for everyone, I think.
Awesome. So with that, people all the time tell me it's just too unaffordable in Miami. How is anyone going to be able to afford anything? What would you say to people like this that feel that it's just unaffordable for the average person?
Miami is an expensive city to buy real estate in. However, having said that, you don't only have to buy in Coral Gables, Miami Beach, Pinecrest. There are many areas of Miami that people just are not aware of where you can still buy an affordable home. The average price of a single family home in Miami has gone up considerably. I think we're now at a 500 and some thousand for the average price of a single family home, but you can get condos that are more affordable. In South Miami, we sold several condos in the last few months that were in the $200,000 range. And so that's the part where I say you may have to compromise on what you buy at first, but if you buy, your equity will increase and you'll be able to, up your size if that's what you need, or your location if that's what you prefer. You may have to commute a little longer to buy right now in Miami, depending on your budget, but we can find the right place for the budget, for almost every budget, we can find it. And also for people that are selling and they say, well, it's too expensive for me to buy something else. If I sell my house, right, that I bought 20 years ago, then it's too expensive or the taxes are too high. But I think people need to remember that in Florida, we have portability. And portability means that you can take the savings of your homestead exemption over the years and transfer it to your new property. I did this myself when I downsized, and your taxes are lowered because your assessed value is lowered by that amount. And a couple can bring up to $500,000 of tax savings in portability to their new property. So I think that was really a good thing that the state government did to enable people to downsize when they had lived in their home for a long time. So both for sellers with portability that they can downsize, and for buyers that are coming from other places that think it's too expensive. I mean, it is more expensive than, some states, let's say in the middle of the country, but we can find something for people to buy, and we're happy to do that. And people are happy. They discover areas they didn't know before, and there's a lot of areas that are up and coming, and if you get in there, then you're going to be a happy camper in a few years.
Excellent. Yeah, portability is a great thing. The downside, though, I've noticed is sometimes now, because the way that they're recalculating the taxes on the new property, that people are seeing a huge jump in the new taxes the next year, because they're basing it off 80% of the purchase price, and maybe the taxes when they bought it are much lower. I spend a lot of time having to educate my clients on, look, your taxes are going to go up.
They are going to go up from what the owner is paying.
Now. Yeah. Of course. The portability, of course, cushions that versus a first-time home buyer.
Right. But, that's what I meant.
Yeah.
You're still going to go up from what the other person is paying that you're buying from, because they've had the home for a while, probably.
I've seen some I saw an extreme one. A client was trying to sell his $3-point-something million house and go buy a $4 million house that was it's brand new. It was one of the Coconut Grove ones, built from the ground up. And his taxes were going to go from like $8,000 to $60,000 or some ridiculous thing. So that kept him in his house.
Of course.
And he's like, we're remodeling. I said, I don't blame you. I wouldn't too.
That definitely can happen. And that affects more the local buyers, I would say, than the foreign buyers. But it definitely affects us here locally, for sure.
But your case where you downsized, I think that is a huge advantage, because there you're going to the lower tax value, and the portability is a huge advantage there.
So I ended up paying almost the same taxes I was paying in my large home.
Okay.
But I would have paid more without the portability. So,
Yeah.
And then, of course, the other part that you have to educate people when they're downsizing for sellers is that it's not only the property tax that you're going to end up paying, which, yes, that's a huge chunk, but it's also the monthly maintenance that you're paying on a large home, right? Somebody has an acre and a, 8,000 square foot home, and there's a lot that goes with that. There's a lot of monthly expenses that go with that, not just utilities, but maintenance and all those things. And so you have to take into account when you downsize that everything is going to be less. And that makes a big difference. It's not just the property taxes, but like you say, it is an education process. And part of our jobs, both in your industry and ours, is to educate both buyers and sellers as to all their options and the pros and cons of doing, you know, a transaction.
As we discussed, real estate and the market has been, well, you said the sales were the lowest in 2023 since 2010. What do you see for 2024 and 2025 in our market going forward?
Well, already for us, and I do deal mostly in the luxury market. My team does everything, but 2024 started with a bang. I mean, it was wake up and start running, right? People are buying and selling. It was instant. I mean, I thought maybe like the first week or 10 days where people were going to be coming back from the holidays and all that. I mean, they were on it. January 2nd, it started moving. So we had a lot, and we have still a lot of pending sales at the end of January that will be closing now, right? And that's a great sign for us in the market that it's moving. We had an incredible week in our office last year as an office. It was a $59 million week, which is fabulous. And I think that it just shows that the market, people are ready. I think people like the new interest rates. Even people that are cash buyers, they like to know that the interest rates in the mortgages are at an affordable rate. Sellers are now realizing that there are more people to buy their homes. And so I think we're going to see an uptick in inventory as well, which is really good. A balanced market for properties in the $1 million range and under is probably 6 to 9 months, and a little bit longer for properties above $1 million. And I think that we're getting there. We're still not there. It's still kind of a seller's market, which is good to know for sellers. And I think buyers, with the new interest rates and with the inventory coming up a little bit, are also realizing that it is time to jump in the game. And if you're coming to Florida, do it. I just had a buyer last week who in 2 days found the house, made an offer, and they're so happy they did, because right after we made the offer, they got 2 backup offers. So people are out there, and if you know the area, you have to determine where you want to be. And I think the market we're going to see a good market in 2024. And I think 2025, from what you and other people are telling us about the interest rates.
Yeah, I think so too. And I think, something that's funny, because for me, I expected what you're saying. I expected tons of pre-approvals when the month started of January, and it lagged for me. It kind of hit towards the end of January. And like this week yesterday was great. I loved being busy again. There were many weeks in the last year or two that were not that busy. I don't like that. But what I think is going to be a big catalyst is when the Fed finally says they're lowering the Fed rate. A lot of people, even in our industry, don't understand that the Fed rate is independent of mortgage rates. So like you said, mortgage rates have dropped, but the Fed has kept rates high. So they're different. They might move in the same direction. But once the Fed comes out and announces a cut to rates, I think the sentiment shift will be even greater. And a lot of people are going to say, oh, let me get off now, because they're starting to lower rates, not realizing rates have already gone down for mortgages, and they're going to jump in. And that's when that activity should really start to pick up, which might be March, might be May, might be June. We don't know yet, but it's coming soon.
I think so too. We've helped a lot of young professionals rent in the Brickell area and downtown area over the past couple of years. And I've already heard from a few of them that, they're thinking this is the time to really try to find something to buy, and maybe they won't be in the same building. It might be a little bit high for them, but they're thinking that this is the time to buy, which makes me happy, because they're spending a lot of money on rent. And if they can get a great mortgage and, maybe a lower down payment, then they can start their equity building, which will be a lifetime journey, which is great.
Yeah. I like to use the analogy when talking to people about, people in our business, we all say buy so you can build equity and things like that. And in 2015, I was looking to rent from my mortgage company. And I'd said the same, like what you just said, you're paying rent to someone. I was like, it didn't make sense. $5,000 a month, it's out the window. And I was like, let me buy something. I bought a freestanding building near Dateland, and it was at 1.6 at the time. Now, I don't even know.
That's amazing.
And so, building equity is real. And even people say, oh, well, now it's so much more expensive now. Back then, 1.6 was a lot. It was like,
huge,
should I do this? It was scary. And that's I tell people all the time that's the normal process. It's okay to be scared through the purchase. It's a huge
Yes.
purchase. But in the
Yes.
long run, look back and say, man, thank God I did.
I know, right? Amazing. That's what I try to tell people. I'm not telling you it's not expensive. It is expensive, but based on your income and your, credit scores and our advice from your mortgage professional, you can afford this. So yeah, it's scary, but in 2 years, you're going to be so happy. Maybe even less time than that to say, wow, because whatever it is, Miami prices are going to keep rising, right? That chart, that graph is going to keep going up unless again we have some catastrophe, and even then we recover. If you're able to hold on to your property, we recover. But I mean, I think maybe they're not going to go up 30% a year, but I think last year, if I'm correct, we went up in Miami-Dade County as a whole like 13%, 13 point something percent. I mean, so we had the lowest sales, but prices still went up.
Yeah.
And I think that's just the way it is, right? There does come a moment when as much land as we have, we don't have it forever. And so prices will go up. We're having incredible condominium projects going up all over Miami, amazing projects. And those are not all reflected on the MLS right now because they're doing pre-sales. The developer are doing pre-sales, but I think that those numbers are going to show a really strong market, in Miami-Dade County. And I think Broward and Palm Beach counties also are showing strong numbers right now, according to the chart. So Southeast Florida, it's where the world wants to be.
Well, Monica, thank you so much for taking your time to meet with me and discuss this. Hopefully our viewers will learn a lot. It was a really great and in-depth discussion. And that's all. Thank you for joining us.
It's my pleasure. Thank you so much. I'm here if you need anything.